In today's video, I'd like to break down the volatility we saw in the markets today. I'll start with our index markets right here first. We'll look at that, we'll look at the VIX, and then we'll also focus on some other interesting markets that we had today, such as natural gas, which was up 9% today. After we finish taking a look at all of our futures markets, we'll then switch over to stocks and take a look at what stock volatility looked like today using a little bit more of a systematic approach. Now let's come back into Thinkorswim and start with our futures markets here first. So if we focus in on the indices in terms of volatility today, the Dow was down negative 1.54%, the place where we had the greatest decline. The S&P following shortly behind negative 1.18%. On the other hand, though, the Nasdaq was down just negative 0.32%. If I actually open up the Nasdaq market, you'll see while it was a down candle, no part of the indices really looks bullish here. The Nasdaq was the one that was a little bit less painful. The Russell here is following behind at negative 0.97%. Now, in terms of some key levels here, if we start with the S&P 500 first, the S&P, the market pulse, has most recently turned bearish. You can see that with this red right here, and that's also pointing in the label a stage of deceleration. Our next level that I think the S&P touches is 4153.62. We can see if we hold that level and bounce from there. Otherwise, the 1272 at 3730.29 is our next potential target. So those are the two downsides in the S&P. If we switch over to the Nasdaq here, the Nasdaq for the most part recently has been the stronger market. We now tagged the 200% of the most recent swing high to swing low. We crossed the 1618 2 days ago, and now it looks like we're making our way back down to that 1272 at 14361.06. Same concept as the S&P, see if that holds. Otherwise, that 100% extension near that 14,000 mark is our next potential downside target. Then finally, if we come into the Dow here, the Dow, I don't think we actually have fibs currently run on, so let's go ahead and quickly run those to get a similar idea. So if we use our swing high to our swing low, the Dow here has really just surpassed that 1272. The market pulse also turned red here, suggesting we should be expecting a period of decline, and that 1272 takes us to 32,656, or really near that 32,750 to 32,500 mark. Those are all the downside potential targets in the three major indices. Now, if we move on to something like, say, the VIX to see, hey, well, what did volatility tell us today in terms of what to expect? Well, while the markets were down, volatility, VIX up 2.57%, all of which suggests that we should start to see a little bit of a bounce. But if you look at the VIX right here, that resistance previously has been near that 30 mark. So if the VIX does bounce into 30 and we start to see a bit of a decline there, then bringing this back to the S&P, for example, that would give us that shorter term target holding near that 1618 and then bouncing from there back into the 200%. The market pulse here, I think, would be a very nice guiding light where if you take a look at this to try and understand what actually happens, once this line goes from red to gray to finally green, that green, I think, would be your opportunity to try and have that final stamp of approval that, hey, the trend is now back to being bullish. So that's our index markets. Now, if we move on to another market that I thought was fairly interesting today, that was natural gas. Now, in a day in which the other markets were down, you had a bit of a sell-off in the overall indices. Natural gas up 9.02%. And if I zoom out here, ever since really that April mark, ever since, once again, that market pulse turned green, we were in a period of red, that market pulse finally turned green, you'll see natural gas has really just been running all the way up. Most recently here, we had price action sell off into our market pulse line one more time. That move was then confirmed with the edge signal confirmation, this green arrow. I talked about the edge signal in the previous video, which I'll link if you'd like to learn more about it. And since that edge signal so far, natural gas has really just been running up higher. We had 1 day of sell-off, which was yesterday, met right back in with the buyers coming back in, buying it up 9% today. So natural gas to me here looks like a very nice trending market for those of you looking to try and find places outside of the indices to participate in. Similarly, if we come into crude here, and I zoom out, crude, most recently we had the market pulse go from red to gray to now finally green. We had that slight little pullback, and since then crude has jumped up higher. We're near our high, 76.98. If we do get that pullback to that market pulse line, currently 71.35, I think that, again, another interesting place for those of you looking for bullish ideas outside of the index markets. So that's the futures market summary that we'll do for today. Now, if we switch over to our stock platform to get an idea of, well, what did actual volatility inside of stocks look like today, we'll use a few different things here. The first is our 15-day scanner analytics. This measures the amount of trades that we had on our live scanner. And what you should notice here is September 30th today was where our bar chart, at least for the past 15 days, we had the greatest volatility. Today we had 419 trades. Just with a quick glance here, September 20th was the day next in terms of our second most volatility, where we had 353 trades. So quite a bit more today than I think we're usually used to seeing. You'll see how the average here is quite a bit lower, but today that volatility really perked up. Now, in terms of where did that volatility actually come in, 70% of the trades that hit the live scanner today were off of our aggressive volatility box model, 29.6% off of the conservative model. So that tells you that for the most part here, while we were selling off, we sold off in a bit more of a systematic, structured process as opposed to just going straight down where we breached not only our aggressive, but also our conservative. If this conservative number was something more like, say, 40, 50%, then that gives you this notion that today was a complete meltdown day. Now, if we take a look at our entry type as well, this should be no surprise, but 80% of our entries today were all long entries, and 19.6% were short entries where price rallied and we were looking to try and fade that rally. So again, for the most part, this lines up with what we would expect today. We had a lot of volatility. We can see that right here with the bar chart, 419 trades today. Of those 419, 70% were off of the aggressive models, but almost 30% there off of the conservative model. So that's still something noteworthy to really keep in mind is we did see a good deal of volatility. And if we bring that again back to the index markets here, all of that volatility I think translates to us at least retesting our most recent Fibonacci extensions with those downside targets we discussed at the beginning of this video. So hopefully this video is helpful for those of you looking to try and trade these markets. Also helpful for those of you looking for other markets that you may potentially find opportunities in. Markets that say today we're still green in terms of the overall structure that we were expecting. Using that, of course, natural gas is the strongest. Crude also looks fairly interesting. And those would be two examples of markets where you might find better trade opportunities if you're not looking to get short the indices, at least for the near term. All right, take care, everyone. Good luck trading, and we'll see you in the next update.